Transparency and governance and all this stuff, this is all really, really important. And we know that that's how companies gain credibility. That's how investors get the confidence to back these young companies. But we mustn't hold our public companies to a standard that is so much higher than how we hold private companies. Or else, these markets will contract.
Hi, I'm Belden Menkus. Welcome to the Purposeful Strategist, the podcast that shifts the conversation about purpose and strategy from what organizations should do to what business leaders are doing and what they've learned along the way. My guest today is James Ashton, Chief Executive Officer of the Quoted Companies Alliance, the organization that champions the UK's community of over 1,000 small and medium-sized companies whose shares are publicly traded. These small and medium-sized publicly traded companies represent 91% of the quoted sector in the UK, employ 2.1 million people, and contribute more than £25 billion in annual taxation. Before assuming the leadership position at the QCA in 2022, James was already well known as the city editor and executive editor of the Evening Standard and Independent titles, and before that, city editor of the Sunday Times. He's also the author of several business books and a non-executive director. James, welcome to the Purposeful Strategist podcast.
Hi, Belden. Thanks for having me.
You've had a really interesting career path. If you can, just help us understand the thread that connects journalism, authorship, and now leading a membership organization that lobbies for small and quoted companies.
Thank you. I mean, what I said in the job interview, what's a good members organization there for? I think we're there at the best of the members, absolutely. So it's about channeling what they want. But I think actually it's really about telling their story, beyond their borders, if you like. I just think storytelling is such a huge part of that. I did that for many years in the newspapers that you mentioned, and particularly enjoyed those interviews with CEOs, what makes them tick, how do they get there, and so on. It's being able to express in the broadest terms possible why those constituent companies that you mentioned at the top really matter to the UK economy, and how we can change things so that the markets work even better for them.
Is there anything you might add to my very brief intro about those sorts of companies and the role they play? Anything that I might have missed out that for you is a pretty significant part of the picture?
I think so often it's about bringing them to life. We know what a big company is. We think of the FTSE 100, you think of Glaxo, or you think of BT. And, I'm really at pains to emphasize that our members are all across the UK and across numerous industries. People say, who's a typical member? And I would say, well, there isn't one. They are united by their use of the public market. They see value in having that share quote, and they range from digital media companies in Glasgow. We have fintechs in Huddersfield. We have skincare developers in Newcastle. We have companies that have got a 2 million market cap. We've got companies that have got a 2 billion market cap. And I think, what unites them is they're using that quote. And I think they all want to grow. I don't think a CEO rolls out of bed in the morning thinking, I'm really excited about going into work to run my small company. I think they're all about momentum and velocity and so on. And we want to help them with that.
Mm-hmm. Was it that sense of growth that drew you to the QCA, or was there something else?
The story, if you like, is fascinating. If you think the number one kind of UK business story of our times is really, standards of living and UK growth, I think actually these companies and the health and efficacy of the capital markets that support them, I think is really, really closely aligned. So I think that was great. And there was a serendipity to it as well. In the time I was self-employed, I chaired lots of events, facilitated conferences, and I'd done a number of events for the QCA. Just at the point when you think you're totally unemployable because you're working for yourself and ploughing your own furrow and doing lots of different things, I discovered that my predecessor was retiring, and it felt like a great opportunity.
Mm-hmm. The QCA says it promotes sustainable and supportive equity markets for small and mid caps so they can focus on expansion. Very parallel to what you've just said. I mean, would you say that is the purpose of the organization, or might you point to something different?
Well, I think the broad purpose is a members' organisation is there for the grace of God. We're there because someone sees the need to have that gathering point. And I remember when I've written in the past about the CBI, and of course that's an organisation that's gone through its challenges in recent years. I always remember people talked about the CBI. People would have, grumbles or say positive things or whatever. And what would always be said was, well, you'd have to create it if it didn't exist. And I think that was quite interesting. And I suppose what occupies my mind is, you call it purpose. I suppose I've been thinking very much about, about relevancy, if you like. No one needs to use us. We love them too. When companies use us to amplify their voice, then they naturally amplify ours. So it's a virtuous circle. What makes me think a lot is, are we doing, all we can in terms of representation, connection, and guidance? If there is a debate to be had about the future of these growth companies in the UK, how do I make sure that the QCA is that most convenient, essential conduit?
If there are things about equity markets today that aren't really working well for small and medium companies, what would you say they are? If there's a campaign, what's the campaign about?
I think there's different strands to the campaign. I mean, I think the members see the value in the quote to the public market. This is a place where you should be able to tap the market, raise growth capital to expand. There is a great value in operating transparently for your financial backers and for society at large. And when the good times roll, this is the place to distribute wealth, the dividends and so on. So there's a great convenience. It should all work. And we know it could work better. We know that smaller companies in particular would like less cost and complexity to how they have to do business, the reporting requirements. They would like more liquidity, more buyers and sellers, more demand for their shares. Also, there's a piece about a better narrative. The first piece I wrote after joining the QCA was for the Times. And, I said the public markets are not the land that time forgot. I think there was a sense that growth was something that happened somewhere else. And I've been at great pains to say that companies don't come to the market when growth is over. The markets themselves, facilitate that growth. And when we're pressing for change with the Financial Reporting Council or the Financial Conduct Authority and then government departments, Treasury, business and so on, when we respond to any of their calls for evidence or submissions, the word proportionate runs through our work like writing through a stick of rock. It is that these rules that might be effective, that might be manageable for a Glaxo or something, it has to work for a smaller company as well, where even right at the top, some of these key jobs like finance director, company secretary, they're collapsed together. People are doing more than one job. And the thing that is really, really hard to articulate is what these entrepreneurs and founders need is time. If they are filling in another form, or reporting requirement or whatever it is, then they're not strategizing, they're not hiring, innovating, investing, exporting, all the things that they want to do. So we want to make sure that the markets work with them and don't work against them. It's fascinating to me that transparency and governance and all this stuff, this is all really, really important. And we know that that's how companies gain credibility. That's how investors get the confidence to back these young companies. But we mustn't hold our public companies to a standard that is so much higher than how we hold private companies. Or else, these markets will contract even more than they have already.
On that, certainly what I see in the press is a fairly gloomy picture about public markets, particularly public markets in the UK. My sense is there's fewer UK public companies today than there have been for a while. Is that caused by some of the issues and obstacles and challenges for smaller businesses you've been talking about, or is it driven by other countries are more attractive places to put your money, or what's driving that?
There's a number of competitions, almost competitive threats going on there. I mean, you talk about the international challenge. I mean, yes, if you are a large cap, we know that companies are mobile and capital is mobile. And so if you are going to IPO, or even if you've already on the market, there is a decision to make. Am I better with a primary listing for these shares in London, in New York, in Amsterdam? where is the place? And we've seen some of those large caps have turned to the US. Absolutely, those large cap moves. I mean, you can't underestimate what that does for sentiment. I mean, those large caps can help sort of set the mood. So that is one thing. At the smaller level, I think it's more of a conversation about should I be public, should I be private? Look, Belden, I mean, there's always been churn. That's the great thing about the market's progress. I mean, there's almost like an ecosystem, public to private and back again. I think there's a real imbalance there at the moment. There are fewer public companies, there are more private companies. And the public market does an incredible service. I mean, it provides a disinfectant, if you like, a real clarity to what a valuation should be. There's no easy way to check a valuation than actually being public. And what we've had in the last few years, private equity is hunting wider and deeper across those public markets for companies. I think some smaller companies have decided that they're better off private, so they've delisted of their own volition, and we haven't really had that IPO pipeline where there are more companies coming back. I mean, there have been some successes. If I look back on 2024, at the larger end of the market, you will see, Canal Plus, the broadcaster, very, very French, even though Paddington is in their sort of cast of characters, chose to come to London. Lower down, great companies like Raspberry Pi and Applied Nutrition. And there's lots of others. And I think the thing I really must do with the QCA, I hope we're doing it more, and it's a real focus for 2025, is we have to celebrate the companies that are there on the market doing great things day after day, even though the market could be more supportive for some of them. And we have a variety of views among the membership, of course. But so I'm trying to celebrate in a LinkedIn post every Friday 3 companies who've done something great in the market. James Cropper, great old company in Cumbria, has teamed up with Oxford University, with its material science division to work on next generation battery electrodes. Warpaint London, a really innovative makeup company, has acquired another group and brought that onto the market, raised the capital, so it's broadening out its range of products. These are the stories that aren't necessarily making the headlines, but I think it's really, really important to celebrate them and to point them out as best we can.
It does seem to me one of the interesting dynamics is the sense of potential investors who like a company. Maybe they're a customer, maybe they're not, but they just think it's a great company and they want to support it. It does seem to me that public markets give those sorts of investors who want to participate in that success, give them a way to do that. Is that factor into any of the things you're doing, or is it sort of, that may be an issue, but it's somebody else's issue?
I'm still looking for which issues are not our issues. There seem to be things that we must have a view on. But it's absolutely right. I mean, look, if I talk about those 3 things I said about less cost and complexity, more liquidity, and the better narrative. I mean, the liquidity point is you want all sorts on the share register as a thriving company. You want demand, you want long funds, short funds, institutional and retail. And what's interesting with smaller companies, because a number of the institutions have got a little more nervous around small caps, which we question why they have done that. Actually, the retail has really stepped in and provided the liquidity for those smaller companies. So if you look at AIM, the UK's growth market, 24% of AIM is held by retail, and that includes founders and directors and so on. But there's a lot of small investors there who are looking for the next big thing, looking for a growth opportunity. I think there is a lot of focus, and there will be this year, on pensions, and rightly so. We want UK assets to swing back behind UK prospects. And I think it's not a bad thing if a asset manager has a global mandate. They can search the world for the best. I think where we need to strike a balance is we run the risk of using our retirement funds to build world-beating companies in other countries. And we also have this irony that some of our great long-term assets are keeping Canadian pensioners warm in their dotage. So we haven't got the balance right. And we want us to think about the long term. That's on the pensions. On the retail side, I think it makes absolute sense. You're absolutely right. If you enjoy a Greg's pasty, if you like playing with Games Workshop Warhammer figurines, then why not buy the shares? And some people do. And I think that culture of share buying, we need to make equities as appealing and as accessible as crypto. And I think there's a real imbalance at the moment. Some of the, CGT increases and things, don't help. But increasingly, people are taking more interest in their retirement plans, self-invested pensions, and so on. About 10, 11% of the London market is in retail hands. We think it's a real tool if the labour market is tight, if there's a war for talent. There are 2 million people around the country in workplace share saving schemes. Why not 4 million or 6 million? This is a real loyalty tool. So it's something that we really have to look at in 2025. I think it's a missing piece that the government has talked about a retail investment strategy, and we haven't quite got that yet.
What's the growth plan for the QCA? What's the strategy?
Well, I think it goes back to the relevancy point. The growth strategy, I think we need to see how we can broaden our appeal. I'm much more clear now than I was when I came in about, how we play in certain sections of the market, what our market share is, what our opportunity is. And actually, there is a challenge because currently there are fewer companies on the market than there were. And as you would imagine, the Quoted Companies Alliance is a subset of the market themselves. So I'm focused from a commercial point of view, what are the levers we can pull? How can we increase our appeal, improve our marketing so that companies feel like we're a de facto choice for them? We're worth backing. We keep the fees low to draw in particularly those smaller companies, but now we have a lot of members in the FTSE 250, so they're bigger. And I'm also conscious about how a third of our members are not the companies, they're advisors. And what I've tried to do is broaden our appeal there. Look at those verticals where we're very, very present, those nomads, brokers, accountants, lawyers. So rather than just casting the net, actually looking at the list. Who are the advisors who are really, really doing a lot of work in our markets? What's our relationship with them? If they're not members, why are they not? Who do we talk to? How can we explain what we're doing? And then one other thing I did, the investors are key. We've always dealt with investors. We've always had a handful of investors in the membership, but I don't think we'd really gone out and cultivated them. So one of the things I did is we started an investor working group. We wanted to give those investors that really underpin the small and mid caps in the UK a voice so that through us they can feed into a lot of the work that the government are doing, the policy work and so on. And that was great because that brought in some other members, really obvious names who are now not just having the odd conversation with, we're really working with. So that's Lion Trust, it's Business Growth Fund, it's Octopus and others. So that's really great to have them.
James, I'm so glad you mentioned those specifics because as you were talking about, bringing in investors, I hate to say it, I sort of got this very gray, big, boring corporate building view. And those names you went through, I just think each one interesting player in its own right, doing something different, really exciting.
And just to add on, I think the other thing, because you talked about our growth, we are a not-for-profit, but we're definitely not a charity. And so if you're a not-for-profit, clearly, if you have some activities that are never going to make a profit, like policy work, then other areas very much need to make a profit. So the membership fee is very important to us, but also we've looked at our events and our publications. We are a lobbying organisation, but we're also a network. And we know that people have won business, have made contacts. There is real value to being part of the QCA, and really want to emphasise that to people that want to work with us.
Yeah, I know it's a fairly small organisation, and yet you manage to get out policy submissions to government and regulators at an average rate about once a fortnight, and then on top of that, you publish original research like this recent study you did on the cost of audit. So maybe asking you to kind of reveal the secret, but how do you manage to get so much done with such a small team?
I suppose the first thing I would say, they're a good team, they're dedicated, they're focused on what members need. The policy machine is pretty well oiled, and what we do there is every piece of policy is filtered through one of those expert groups, whether that's the investor group or groups that are focused on corporate governance, financial reporting, share schemes, primary markets and so on. There's so much time put in by those experts on particular pieces of work. And the job of my policy colleagues is really to distill that down into something that gets the point across. And I suppose where I'm at pains there is to make sure that the work really sings and that we don't suffer from editing by committee. It's very difficult because I suppose in a members organisation, the job is to please everyone. I say to anyone involved, the clue is in the title, with a quoted companies alliance, the companies have primacy. So it's got to work for them. We have to focus on the companies. There's so many organisations involved in capital market reform, and that's great because it's not something that any one organisation can do. But it always surprises me that there are people speaking up, and the companies are almost a secondary consideration. To have this debate without the companies is a bit like reforming the grocery industry without the food manufacturers. A market with nothing on the shelves is not really a market. So it's our job always to make sure that they are considered.
The sort of implication of that is, and that they find it's a valuable option for them for raising capital, for doing what they want to do.
Absolutely. How does this regulatory change play at the coalface? And that's what we have to do. Post the budget, I went into Downing Street, and before I went in that morning, I spoke to 4 companies all over the UK. And I said, look, this is fresh. This is straight. This is what they're saying about you today in Cambridge. This is what this company that wants to do this says about, increases to national insurance and so on. There's no substitute for that. So that's what we've got to carry on conveying.
Well, it sounds like that's a key, sort of almost right at the heart of what the purpose and strategy is. Looking back over your 2 years or so as CEO, what surprised you? What have you learned?
There was quite a lot that I expected. I mean, coming in, I did a lot of research. What was our output, whether that was the research reports that you cite, what were we seen as saying and doing in the media, what were the members' views, what were the profiles of the directors, and what were the financial accounts. So all of that I looked at. And those bodies that we talk with most, I call them the big 5, the FRC, the FCA, Treasury, Business, and the Stock Exchange. Of course, the Stock Exchange is managing the AIM market. And I think actually that connectivity built up over many years was something that was really good. We are part of a lot of those conversations. I think there is a mutual respect. And that's good. People know they can come to us and we can go to them. And that's not obvious from the outside. And so some of the marketing and comms that we've done, I really wanted to get under the bonnet. What is the QCA? What does it stand for? But what does it do? Very prosaically, what happens on a day-to-day basis? What else surprised me? I suppose, when it has been hard with membership, because of that contracting market, I think I probably had to put more of my time into the membership piece, the proposition, the selling of such, and those conversations. That point about attracting and retaining, I think, is something. And I have colleagues who, do that all day, every day, but I have to do a significant amount as well.
Anything you might do differently looking back on it?
I knew you were going to ask awkward questions like this. I took advice from CEOs I knew, people in search, and particularly current or former trade body bosses. And actually, interestingly, I will plug an organisation I discovered. It's called MEMCOM, MEMCOM. This is a members organisation for members organisations, which initially blew my mind. But there are a lot of us. And actually, to have an organisation that to bounce things off, whether that's around membership strategies or HR or marketing or all sorts of things, has been really helpful. But I think what one friend said to me was, it's clear to me that you're setting out the way you want to go. Are you sure that you've listened enough? That was a good challenge. So I think it might have come maybe 6 months in. I made sure that I sat down with everybody on the team and also had a good chat with people on the board. We were doing so many good things for members, but actually what came out of those conversations was, are we doing enough for the people in the team? So we're not throwing hundreds of thousands at this because we haven't got it, but actually to be able to help members of the team with strands of training and learning, whether that's public speaking or digital skills or some of the more capital markets focused qualifications. Really wanted to try to do a little bit of that.
And any advice you might give to other CEOs as they think about purpose and strategy for their own organization?
I'm still too much of a newbie, I think, to be offering advice to people who've been doing it for a long time. But if you let me, I was thinking about this. And, a few years ago, I wrote a book called The 9 Types of Leader. And my wife will laugh if she listens to this because she thinks every conversation I'm having involves a book plug. And
as it should.
And it was interesting, your theme very much around purpose. So these 9 types were types I'd identified through the CEOs I'd interviewed as a journalist, and I kind of topped those up with fresher interviews. And there's the different character in there: the alpha, the human, the lover, the scion, and so on. And actually, it's the campaigner that sprang to mind around purpose, and those sort of really brave CEOs that have purpose alongside profit. And it got me thinking of the Unilever example, of course, and people talk about Paul Polman almost interchangeably with purpose. But I thought the point I would make here is, as I put in the book, having purpose is not a panacea for success. It does chart the course, but often it paves the way for failure. And what was interesting in looking at the Polman years at Unilever, in 2010 they came out with this sustainable living plan, a kind of a charter for the company that was very much aligned with the United Nations SDGs. And of course, this was something that so many other companies followed in their wake. But I look back at them, it was a 10-year plan. And actually, 10 years on, many of these ambitions had failed. But I think the value was that they'd set them in the first place. And a good example is they were so bold as to think that they could influence their consumers, their buyers of shampoo, to use less water in the shower. I mean, it's almost a godlike ambition. It's so bold. And of course, actually what they did is they totally failed. By the end of the 10 years, the consumers weren't standing in the shower less. Actually, the water usage had gone up. So I think it's very interesting to have purpose, but success manifests itself in different ways. Polman didn't take his shampoo buyers with him on that journey as far as he might, but he certainly took his staff with a real, force of will.
Anything we haven't touched on that you'd like listeners to know?
The QCA doesn't need to be Tesco. We don't need to be a household name, but I do hope that by talking and posting about the organisation, that we become that little bit better known. I think that's so important to be a consistent part of the conversation on behalf of these companies that we represent.
I kind of hear that the activities you're involved in have the potential, and probably in many ways are already, leading to growth opportunities for their companies, the listed companies, which again, back to something you said earlier, leads to sort of people living better lives, happier, materially better, but hopefully in other ways too.
Yeah, I'd like to think so. I mean, look, this is where regional growth comes from.
Brilliant point, James. Absolutely. Anything you'd like to ask me?
I'm interested in how all of the people you've spoken to for this podcast, how does it all loop together, Belden? Are you sketching out a book on the back of this?
No, James, I wish I were. Or in some ways, I'm glad I'm not. I'm not sure which. One of the things I'm always interested to hear from a CEO is, in their context, in their organization, what do they even think purpose is? Is it the add-on that makes the world a slightly better place and something that's a little bit tangential? Or is it a bit more in the core, a bit more, it's a natural thing that flows out of what we're doing? And my read is, for the QCA, it's really integral to what you're doing. In this whole conversation, it's mostly been about, this is what we're doing and here's how it makes the world a better place. And for me, that's a powerful place to come from. Yeah. I'm really, really glad you were able to join us. I'm looking forward to a date, maybe in a couple of years, when we can talk about how the public markets, and particularly the small to mid-sized bit of it's really growing and getting even more robust, and lots of people are seeing it as where they want to be. And I'd love to hear from you then about how you managed to do that.
Yeah, sure. I hope so. That would be great. That's predicated on hitting the metrics and the targets, Belden. So yeah, fingers crossed I have, and then we certainly can.
Absolutely. Fantastic. James, again, thank you for joining us. It's really been, for me, very educational, because it's a part of the economy I've not spent a lot of time focused on.
Well, thank you so much for your interest.
Thank you for joining us for this episode of The Purposeful Strategist. In addition to being available on our website, you can find us on Apple Podcasts, Spotify, and Google Podcasts. If you enjoyed this episode, please do follow us and leave us a 5-star review. It helps others find the podcast. Thanks again, and join us soon for the next episode of The Purposeful Strategist.